Podcast Network Asia. FirstMetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and FirstMetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of FirstMetroSec. FirstMetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
Hi investors and happy holidays. It's Anjz with a Z from First Metro Securities and welcome to Market Bites. If you're looking for fresh trade ideas or just want to know which stocks are worth watching, then you're in the right place. Today, we're breaking down highlights from our latest update on Converge ICT Solutions Inc. or Converge. We are maintaining our buy call on Converge with target price slightly trimmed to 20.30 pesos as we roll forward our valuation base to next year. Even with that adjustment, the numbers suggest solid upside, with valuations expected to re-rate to about 5.8 times FY26 EV over EBITDA. So, what's driving this confidence? First, its broadband momentum remains strong. Despite heavy rains in the third quarter of 2025, Converge still added more than 100,000 new fiber subscribers, thanks to strong demand in its prepaid segment. Customer churn, or turnover, has stabilized at 2.2%, and management is focused on making the network more resilient and speeding up repair times. The company is aiming for 4 million subscribers by 2027, and with competition still finding its footing, Converge looks set to keep growing. Another point, Converge is best positioned under the Konektadong Pinoy Act or KPA. This law could unlock new revenue streams for the company. Converge has only used 37% of its fiber ports so far. That means plenty of room to capture new demand, especially since most new players are also focused on fiber. Roughly 5.3 million ports are available to rent out for Converge. The open access provisions under the KPA could also pave the way for cost-efficient expansion, whether that's moving into mobile or carving out backbone infrastructure to focus on innovation. One more thing to highlight, Converge isn't just about broadband anymore. It's rebranding as a quote-unquote tech co, using its infrastructure to deliver value-added solutions, starting with enterprise clients. Think cloud services, AI, and managed IT solutions. Demand for these is rising fast, and management expects this side of the business to really accelerate by 2026. Now, here are some key takeaways from the 9M25 earnings. Converge announced 9M25 net income of 8.9 billion pesos, up 8% year-on-year, in line with both consensus estimates and our projections. This performance was driven by steady growth across both business segments. Consolidated service revenues collectively grew 10% year-on-year to 33 billion pesos. By segment, residential revenues increased 9% year-on-year to 27.7 billion pesos. On the subscriber side, Converge added 912,000 gross fiber connections this year, with net additions at 370,000. That brings total residential subscribers to 2.93 million, up 19% year-on-year, split across FiberX, Surf2Sawa, and Bida Fiber. Meanwhile, the enterprise segment continues to shine, with revenues up 16% year-on-year to 5.15 billion pesos. Growth was strongest in wholesale at 32%, followed by SMEs at 27% and corporate clients at 9%. Even with operating expenses rising 22%, mainly from service fees, marketing, and staff costs, Converge still grew EBITDA by 11%. Margins expanded to 61.2%, and return on invested capital improved to 18.2%. Cash capital expenditures held steady at 7.5 billion pesos. Management is sticking to its full-year guidance of 20 to 25 billion pesos, with spending focused on one-off investments like data centers and subsea cables. Now, let's talk about what could make us even more bullish on Converge and where things could go wrong. To get more bullish, we'd like to see the following. The Konektadong Pinoy Act opening new revenue streams, whether through wholesale infrastructure, partnerships for last mile delivery, or even entry into mobile. Faster market share gains, narrowing the gap with the current broadband leader. Lower churn rates, meaning fewer customers leaving thanks to better service levels. Stable ARPU, or average revenue per user, holding up better than expected. And finally, a higher dividend payout, which would directly benefit shareholders. On the flip side, here's where we could be wrong. The KPA's detailed rules could hurt earnings, especially if pricing regulations are imposed on open access infrastructure. Tougher competition could squeeze ARPUs and erode market share. Higher operating costs might creep in, driven by manpower or repair challenges. And a shift toward 5G wireless broadband could change the playing field, pulling demand away from fiber. So, to wrap it all up, that's a buy call for Converge at 20.30 pesos target price. Yeah, and that's it for today. Thanks for tuning into Market Bites. If you found this helpful, don't forget to follow us on social media for more updates. That is First Metro Securities on Facebook, Instagram, and YouTube, and FirstMetroSec on TikTok. Catch you in the next episode.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the First MetroSec family.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.